My name is Ankit Shah, and as Mark said, I'm the Vice President of Strategy and Business Development for New Gold. Before I begin, I'd like to thank the Virtual Investor Day Committee and Laurentian Bank, their sponsor, for having New Gold. This is our first year at the conference. Maybe just on slide 2 and slide 3, these are our cautionary notes regarding forward-looking statements, and some of the comments I make today are going to be forward-looking in nature. Moving on to slide 4. Sustainability and ESG is a key pillar of our business. This slide summarizes the efforts we take to ensure aspects impacting our business are front and center. Within sustainability at New Gold, we have 4 focus areas: Indigenous peoples, tailings management, water, and climate. We've adapted a sustainability effort to align with the most pressing issues facing our company and the mining sector. As we look forward, for us, it's not about presenting a new way of operating, but looking at what we're currently doing and looking for areas that we can build on. We're currently working on our 2030 roadmaps with goals to significantly reduce our emissions, all while continuing to create value for our host communities in the areas we operate. Looking forward, we plan to implement a climate action plan that outlines opportunities for electrification and energy efficiencies, and this is all in an effort to reduce our emissions. Our objective at New Gold is clear. We want to create value, we want to minimize environmental impacts, and do our part in achieving larger global objectives on climate, water, tailings management, and Indigenous relations. And we want to do this all while prioritizing our health, safety, and the well-being of our people and the people in our communities in which we operate. Last week, we released our 2020 sustainability report. It's a great report, and I encourage everybody on this call to read it, and it can be found on our website. Moving to slide 5. Slide 5 is a snapshot of our current portfolio. So New Gold, as Mark mentioned, is a Canadian-focused multi-asset company. We have 2 operating mines, and these are the ones in blue on the page, in Canada that have a strong operational track record under our new leadership team. We've enhanced our financial flexibility through a few creative transactions we completed in 2020. And with this strong operating platform and our new strong balance sheet, we're now looking to crystallize value through organic opportunities. Maybe I'll touch on our operating assets first, one by one. So maybe I'll start with Rainy River. Rainy River is an open pit and underground mine located in Ontario. This year, the mine is expected to produce between 270,000 and 290,000 ounces of gold at an all-in sustaining cost of between $1,125 and $1,225 per gold equivalent ounce. 2021, this year, is actually a very transformational year for Rainy River, as the mine now becomes a free cash flow contributor. What's more exciting, that over the next 5 years, Rainy River's production profile is expected to increase with a reduction in both sustaining cost and sustaining capital. This should provide significant improvement on both margins and free cash flow starting this year and over the next few years. The team is also currently studying the potential to expand the mine life by converting additional underground resources to reserves. This could extend the mine life beyond its current mine life of 2028 and further increase the underlying value of the asset. The team's looking to complete this work, and we're looking to have that done by later this year. Moving on to New Afton. So New Afton is a block cave underground mine just off the Trans-Canada Highway in near Kamloops in British Columbia. This year, the mine's expected to produce between 52,000 and 62,000 ounces of gold, between 56 million and 66 million pounds of copper, all at a sustaining cost between $1,225 and $1,325 per gold equivalent ounce. A few weeks ago, you might have seen in our news releases that we received our B3 permit, which was a significant milestone for New Afton. This allowed the team to begin extraction activities this quarter and continue to advance throughout the year. Similar to Rainy River, the New Afton mine is also working towards expanding its mine life and cash flow generation with the development of the C-Zone. Construction of the C-Zone remains both on time and on budget, with first extraction expected in the second half of 2023. At today's prices, and we've seen the commodity prices, especially copper, increasing significantly this year, during the development period, the mine actually will self-fund its capital costs for the C-Zone development through New Afton's existing cash flow. So we look forward to this transition to the C-Zone because what C-Zone provides is an additional 640,000 ounces of gold and over 480 million pounds of copper, and at higher grades versus the current zone. So, this will continue to provide the company with significant exposure to copper for years to come. So what these two do together over the next 5 years, these two Canadian assets on an annual basis will generate over 400,000 ounces of gold, over 65 million pounds of copper, all at lower costs compared to today, and this will generate significant free cash flow over this period. As I mentioned last year, we completed significant corporate transactions to right-size our balance sheet on both New Afton and with the sale of Blackwater. But as part of the sale of Blackwater to Artemis Gold, we actually retained a significant 8% gold stream on the project and also took a 6% equity stake in the company. So in addition to both Rainy and New Afton and the significant increase in production and cash flow it's going to generate, we also have the potential of 450,000 gold ounces from our gold stream once in production. Moving on to slide 6. So slide 6 provides a summary of our strong balance sheet. Starting on the right-hand side, we currently have $100 million of debt due in 2025 and $400 million of debt due in 2027. At the end of the first quarter, we had $131 million in cash and an additional $304 million available from our existing credit facility for strong total liquidity of $435 million. In addition to this, we also have a Canadian $50 million payment due to us in August, and this was part of the Blackwater transaction. So when you take all these components together, coupled with the ongoing sustaining free cash flow we're going to be generating this year and over the next few years, this allows our company to remain a very strong financial position. It was important for us to right-size our balance sheet and right-size the operations because now we've actually started to look to our future and thinking about how we're going to continue to grow in Canada, and that's what slide 7 does. Given the transactions we completed that year, we were now in a position to start growing our longer-term pipeline. So recently, we completed a few strategic minority positions, and I'll touch on some of the more recent ones, but the slide highlights our positions right now in totality. So Heart Gold is a high-grade underground operation in Ontario. The mine currently has over a 1 million ounce resource base and has the potential to produce 100,000 ounces of gold annually with a relatively underexplored land package in a mining-friendly area. Talisker Resources is a junior resource company focused on gold exploration in British Columbia. The company owns a significant land package, and it's actually in close proximity to our New Afton mine. And this group of experienced explorers are working towards unlocking a potential multi-million ounce resource not too far away from our existing operation. Angus is our latest investment. This also represents a highly prospective land package within a mining camp. The group that's leading this are highly experienced and have a strong track record in resource development and value creation. These strategic positions, plus the ones we completed in 2020, have now given the company significant exposure to additional gold resources as we continue to broaden our Canadian platform. Slide 8 provides additional details of Rainy River and its first quarter. So during the quarter, Rainy River delivered on plan with gold production of almost 55,000 ounces of gold. The focus in the quarter was on waste stripping, and this was actually strategically prioritized to be completed during the winter months. This obviously impacted both our grade and the increased strip ratio during the quarter, but this was to plan, and gold grade is expected to increase in the second half of the year, and we should see a lower strip ratio in the second half as well. Development of the underground Intrepid Zone continued to advance this quarter. The team has now opened up the first level in ore, and we have seen slight gains both on tons and grade versus the resource model. The plan for 2021, we're going to continue to advance ramp development. We're going to continue the definition drilling on the lower part of our ore body and ore development of additional levels. We're actually optimistic that with these priorities, this will help accelerate the underground production start ahead of our current plan. Similar to Rainy River, slide 9 provides additional details on New Afton's first quarter. So during the quarter, the New Afton mine produced almost 40,000 gold equivalent ounces. Following the tragic mud rush on February 2nd, mining of the main zone ramped up to pre-incident rates by the end of the first quarter. Mining also continues to ramp up on the recovery level, which is now fully utilizing remote mucking following the accident. Pre-development work on B3 advanced during the quarter, and as I mentioned, with the receipt of the B3 permit, extraction activities can now commence and will continue to ramp up throughout the year. On C-Zone, underground and surface construction work continued during the quarter, and the project remains both on time and on budget, and we're excited for the start in the second half of 2023. Also this year, we've started to ramp up our exploration activities, and we've budgeted $12 million at New Afton. And during the quarter, we actually completed our first pass reconnaissance drilling, actually right next door to our New Afton mine in an area we call Cherry Creek. It's still in the early days. However, some of the preliminary results we've seen have defined patterns that are very similar to New Afton's current main deposit. So this is very exciting for us. Over the remainder of the year, we'll continue to focus on the second phase of drilling, and that will focus on deeper targets. In addition to this, we're also always looking at new technology, and we've initiated an underground drilling program with the use of artificial intelligence, and we'll continue to drill these targets throughout the year as well. Slide 10 just provides a summary of both of our operations and shows 2021 on a consolidated basis. So at Rainy, we're on track to produce approximately 285,000 gold equivalent ounces at less than $1,200 per ounce. At our guidance assumptions and in today's strong and healthy commodity price environment, Rainy River transitions into a free cash flow contributor, and this will only increase over the next 5 years. As I mentioned, our sustaining capital profile decreases, our cost profile decreases, and our production base increases. Excuse me one second. Apologies for that. Technologies and sensor lighting. At New Afton, we're on track to produce approximately 57,000 ounces of gold, approximately 60 million pounds of copper, or said another way, approximately 180,000 gold equivalent ounces at less than $1,300 per ounce this year. As mentioned, for 2021, the focus will remain on the transition to the B zone and the continued development of the C zone. Slide 11 is a slide that I really like, and it really captures why we're so excited here at New Gold about our future. 2021 is a transformational year for the company. I think I've mentioned this a few times, but Rainy River now transitions to a free cash flow contributor, and we've made great advancement at New Afton, both with the transition of the B3 and then also with the continued development of the C zone. So these assets now position us to really focus on operational and cost optimizations, such that we continue to find ways to maximize our margins and ultimately increase our free cash flow. What's really exciting for us is that, on average, over the next 5 years, our gold equivalent production is planned to increase by approximately 30% to 575,000 gold equivalent ounces. With all the major capital programs at Rainy now behind us, with C-Zone development capital self-funded through New Afton's cash flow, and with the planned decrease in costs, and the company is well positioned to generate significant free cash flow in this year and in years to come. Also, I should mention, with our leverage to copper and with copper price significantly higher than our guidance price assumptions, free cash flow will only continue to grow. Said another way, over the next 5 years, for every 25-cent increase in the copper price, this actually equates to approximately 40 million of additional free cash flow for the company. Slide 12 highlights a few of our key catalysts for the year and where our focus is. As I mentioned, we continue to focus on the ramp up of the recovery level at New Afton. The B3 permit is now in hand, and so the focus now moves to extraction activities and the continued advancement throughout the year. And at Rainy River, the mine becomes a free cash flow contributor, and we continue to work on the optimized underground plan, which we hope to complete later this year. So in closing, New Gold is a Canadian-focused company. We have 2 operating mines in Canada. The company's gold production profile is expected to increase significantly over the coming years and at lower costs, which should only generate significant free cash flow for us. This, coupled with our strong balance sheet through some of the strategic initiatives we did in 2020, this provides for a premier investment opportunity for all of you listening today. And with that, Mark, I'd like to thank you and the group today for having New Gold present to the conference, and this concludes the presentation portion, and I'll hand it over to you.
That's great, Ankit. Thank you so much. You know, I always have a moment in these presentations when I feel very blessed to see insight inside the company, so that investors really get an inside view of where things are, the vision, and where things may be going. We do have a few minutes here, so if it's okay, we have a couple of questions that have come in. I'd love to follow up on a couple of these before we break for lunch.
Sure, yeah, no problem.
Good stuff. One question suggests after 2 years, it seems that a lot of hard work, New Gold was repositioned to succeed going forward. What steps did you and the management team make for this success, and what steps are left to complete the repositioning?
Yeah, no, Mark, that's a great question. I think it was really 2 years ago, or it's been almost 3 years now since the new management team, Renaud Adams, our CEO, came in. The first major step was really right-sizing the operations, and so we had 2 updated technical reports that really focused on free cash flow generation and profitability at each of the assets. Once we were able to establish that, the next step was really securing our balance sheet, so having strong assets, but then having a strong capital platform in place as well. And so I mentioned a few times, and I didn't go into detail, but in 2020, we struck a partnership at New Afton with the Ontario Teachers Pension Plan. And so that actually raised about $300 million to New Gold. And with a portion of that proceeds, we were able to pay down our debt to really give ourselves a runway in front of us over the next few years of really focusing on the operations and optimizations and not so much on debt repayment. And so by right-sizing the operations, by right-sizing our balance sheet, we're now in the optimization phase. And so looking forward, how we're looking to continue to do this is really working on organic opportunities. And so I mentioned in the presentation, looking to unlock underground value at Rainy River, advancing the C-Zone development at New Afton, but also starting to look at exploration again. And so we have a small exploration program at Rainy River and another exploration program at New Afton. And so really looking at organic opportunities that can enrich our existing asset values.
Great, thank you for that, Ankit. And speaking of opportunities, I'm curious what your strategy is on the investments in Talisker and Heart Gold and several other juniors that's in play.
Yeah, I mean, ultimately, given that we've right-sized the balance sheet and we have 2 operations and we're starting to put exploration dollars, we're a Canadian-focused company. And so what we do is we've done toehold positions in some of these strategic opportunities near existing infrastructure, near existing assets for longer term gold resource in Canada. And so, in the near term, it's really to let these management teams do what they do best and for us to be a supportive partner for them. And then going forward, we'll see where the opportunities lead to. But, speaking of Talisker, it's a highly experienced exploration team, about 150 kilometers from New Afton. They have a vision to have this into a multi-million ounce gold resource base, and having a mill down the street, there's opportunities for the future. And so that's what makes us excited about some of these investment opportunities.
Great positioning. Another question in terms of sale. On the sale of Blackwater to Artemis, is the equity position in Artemis a long-term holding? It seems for the 8% stream, is New Gold getting lots of bids from the streaming companies?
Yeah, I mean, that was an interesting transaction for us. So, I mean, Blackwater, the way it was structured is there was a cash payment. And as I mentioned, we have an additional 50 Canadian million dollars coming in August. But we also retained a big gold stream, the 8% gold stream, and the equity piece in Artemis. And it was really to support the story. And those guys have done a fantastic job there. I mean, you've seen the value creation they've already done over the last 18 months. I mean, our equity has also doubled over that portion. And, you know, we'll continue to be supportive of that story. And, you know, I wouldn't say it's a long-term investment for us, but we'll continue to support the story and help the company as they continue to get closer to startup. In terms of the stream, you know, there's no immediate rush to sell it. It's every year it gets more valuable as we get closer and closer to production, and as the gold price has gone higher and higher since we did that transaction, it gets more valuable. I would say, you know, it is a highly interested stream on the street. You know, having a large stream on a Canadian asset in BC with vision to start up would be highly valued by the streaming and royalty companies. But for us right now, you know, we're focused on our assets, and we'll continue to let the stream increase in value before we think about any strategic opportunities on that front.
Great to know. Thank you for that. Why don't we end with this question, which is, what is the operating outlook for 2021 in general, and are you on track to meet your guidance?
Yeah, no, that's a great question. I mean, we are on track to meet our guidance. As I mentioned, you know, this year is really a transitional year for us. Rainy River will produce significant gold, and that will continue to increase over the next 5 years. C-Zone development is both on time and on budget, so New Afton will continue to generate cash flow over the next few years, especially at these very rich copper prices, and so that will be self-funded. And so we're on track for guidance for this year, and we're really excited about the future as our production profile increases 30%, our costs come down, and we continue to, you know, become a Canadian leader.
Great to hear that. Ankit, I really appreciate the insights and the openness about where the company is and where things are heading. We'll look forward to learning and watching more as the company moves forward. And I just want to remind everyone watching that please, again, fill out your questionnaires. It helps us make a better experience. And at this point, we'll end this webinar and look forward at the top of the hour for noon. We're moving into Argonaut Gold at this point. So Ankit, once again, all the best to the company and your team. We look forward to watching where things go.
Great. Thanks so much, Mark, and thanks for the entire team. Appreciate it.
All the best. Take care.